Welcome everyone to Frontier Opening Bell, Friday the 3rd of July. I am hosting Amafaye. Welcome our panelists to today's show. Ayode Jiebo, the CEO and chartered stock trader at Frontier at Afrinvest Securities. That just conscripts all of you into the Frontier Africa reports. Thank you, Ayode. Good morning from Afrinvest.
Good morning. And thanks for having me.
Afrinvest has footprints beyond Nigeria, so that's a bit of the cover a number of frontier markets in West Africa, so beyond Nigeria. Thank you, Ayode. We appreciate that. Ali Kansajo, the man who's gotten the entire East African market under his footprints. Thank you so much for coming through this morning, Ali, the CEO and founder of Rich Frontiers Management Limited. And of course, Luke Ofujebe, who is the team lead in charge of equity research at Fetiba Capital Management. They also got a lot of frontier markets being covered within the investment bank and securities firm. Thank you, Luke. It's also good to see you.
Thank you, Barton. Thank you for having me here today.
Friday, everyone. So let's get today's show up and running. Look at how we finished off yesterday. The Nigerian market was up, equities market up about 0.9%, just down, but negative 0.9%. Ivory Coast was down by a bit of a smaller margin, but that's 0.6%. Egyptian market was closed for Wednesday and Thursday. So the figures you see there, 10,764 came in from Tuesday when the market was last opened. In Kenya, the market was around the flat line, 0.03%, with the news this morning of shares trading being suspended on Kenya Airways. And South Africa GSE, which is the emerging markets on the continent, 1.54% on the all-share index, and the top 40 index was even bigger than that pocket. So let's talk about East Africa, and Kenya Airways is the big story this morning. Meantime, continental-wise, AFDB joined WTO, the IFC, and other multilateral development banks to fund trade finance globally. Africa will be a major beneficiary of that. That announcement came yesterday evening. The turnover on the Nairobi Securities Exchange was up 5% to 83 billion Kenyan shillings in the Q1 2020, according to latest data. Meantime, Kenya's Leapfrog Africa says planning to acquire 24% equity in ICLI. Meantime, MFS Africa, which is into mobile money transfer, says it's taking over Bionic, which is another mobile transfer payment services transaction firm, to enable cross-border payment for SMEs and fintechs within the Africa space. That's the East African story. Let's fly with Kenya Airways with Ali Kansajo. Bring us up to speed, Ali.
Good morning, and thank you for having me again. So Kenya Airways, just to put you in context, up 80.9% over 4 weeks, up 153% over 3 months. The best performing share year to date, up 75.61%. Which is ironic in the context that they've told us they've already lost $100 million because of the shutdown, and if this continues, up to $500 million. But as we discussed previously, the government has been looking to restructure Kenya Airways, and the idea behind it was to merge Kenya Airways with Kenya Airports Authority. Kenya Airports Authority's balance sheet is asset rich, a lot of land value around Nairobi Airport, extremely valuable real estate, and basically use that very rich balance sheet to support Kenya Airways going forward. We already knew they were going to buy out KLM. Air France KLM have about 26% of the shares, and apparently they've tabled an offer to Air France KLM at a premium to the current share price prior to this 3-month suspension. So that is the background to the whole matter.
So I'm interested, Ali, in what happens to shareholders with this trading suspension. And this is a stock, a company that is cross-listed on about 3 exchanges. So what happens? Where do we go from here? What are they telling investors?
So what they're telling investors is that investors need to sit tight for 3 months. This will not be a tradable security. It's cross-listed, like you said, in Uganda and Tanzania. The same rules will apply to those two markets as well. And essentially, investors have been buying into the stock because you can see from that share price appreciation on the basis that the government is going to pay them a premium to the current price at the suspension point. So the shareholders are sitting on some paper right now. It's not tradable unless you trade it offline, but essentially they're going to be sitting and waiting for the government to come forward with exactly the proposed price of the buyout.
Interesting, because if you look at the Uganda and the Tanzania exchanges, Kenyan Airways is a big company on their market cap and on the size and in terms of volume, liquidity in these sort of smaller exchanges.
Correct. I mean,
so they're going to feel this suspension.
So yes, I mean, what's happened is it's not one of the most liquid shares anymore, because you know the volume of shares that are freely floating, some are held by Air France KLM, some are held by others. So there hasn't been tremendous amounts of volume, but you are right. It is obviously an iconic stock, and people like to trade it, particularly because the price was quite low for a long period of time. That makes it attractive for retail investors. But I think retail investors will be looking to get out of this share at a handsome premium to the suspension price.
Are Kenyans emotional about the shares of Kenya Airways on the Nairobi Stock Exchange? Are they emotional about it?
Yes.
As a pride of Africa, that's what the company says about it.
Well, you've got the name, right? It is called the Pride of Africa. Kenyans, this was one of, I think, the first privatization at the Nairobi Stock Exchange many years ago. It's been held by many small investors who've been through thick and thin, because you know, of course, there was a time when Kenya Airways had very little competition. It was the dominant brand across sub-Saharan Africa, but that got eroded by the arrival of Ethiopian and then various challenges from different countries. So there's a lot of emotional attachment to this share, and that's why I think the government are trying to do right by those small shareholders by giving them something for all that time that they held this share price. So yes, interesting development. If I can quickly just touch on a couple of things you mentioned. Ethiopia, just to mention, is still under lockdown, no internet access. We had the funeral yesterday of this iconic singer from the Oromo tribe, but we're not getting information flow out of that. We're getting a lot of Twitter wars between the Ethiopians and the Egyptians, but essentially not much information about the situation on the ground. NSE did better than many people expected, because this is the Nairobi Stock Exchange, which was listed itself on the Nairobi Stock Exchange. Volumes were higher, but the trend was like what you've seen in Nigeria, which is international investors divesting, local investors stepping up to the plate. Leapfrog, big investor in frontier market insurance companies, investing in ICEA Lion, not listed, privately held, but meaningful investment. And then the last story you had was about mobile banking. Obviously, that's a very hot and sexy space. But here in Kenya, it's all about M-Pesa, who are the dominant platform and have blitz-scaled all the way.
Thank you. Quite a lot of story on your breakfast table this morning, this Friday. And it's a Friday, by the way. But let's step into the West African and Nigerian markets. We finished off in the negative territory on the back footing yesterday, 0.9% of the Nigerian market. Meantime, Moody's on Wednesday released a report that Nigerian banks' dollar deposit inflows declined due to low oil prices, and there could be some liquidity. A problem here for Nigerian banks as far as foreign currency is concerned. That's from Moody's Africa. Meantime, Nigeria's listed non-interest lender, Jaiz Bank, says sees 5.01% gross earnings in Q1. And Ghana Fidelity Bank reported a 33% rise in profit before tax to $55.5 million in full year 2019. And meantime, Togo sold two bonds of 3 years and 5-year tenor what about 30 billion CFA fund? Ayodeji Ebo, CEO at Afrinvest West Africa. Ayodeji, what's your take here on the Nigerian market, considering if you look at the trade? I would like to also talk about the treasury market of the fixed income of yesterday.
Yesterday, we saw for a lot of investors that lost out of the bids at the primary market auction, had to get their bid filled yesterday in secondary market. So it was a bit bullish. But you know, interest rate has continued to decline significantly. And when you check, you look at that based on available liquidity, we feel that the bottom is not anywhere near, because we still expect about 6 trillion worth of maturities, both OMO and primary market auction, this before the end of this year. And when you look at what government is also trying to raise, that is still very minimal relative to available liquidity. So on the fixed income space, interest rate has remained very low. We know it's an abnormality to have a lower interest rate and high inflation, because even for the pension fund administrators, if this continues for long, it means that people that are saving now, and when you compare it to the return, it means you'll be worse off. And that is one of the major reasons we are seeing pressure on FX. So for most people, rather than stay with a 2 or 3% yield, you can also take a bet on FX, which is a major area which you highlighted earlier based on Moody's report. We can, for the banks, you would for them, they would begin to see a lot of restrictions. If you go back to as far as 2016, we were not able to even use our card to purchase dollar-denominated transactions online. We've seen some restriction from some banks now, based on the reduced liquidity in the FX market. We would still just continue to trust that the CBN would step in as soon as possible for us to have what should be the average rate of the naira against the dollar, and ensure that there is liquidity. Liquidity is really critical, and you highlighted, their report highlighted the inflow. So now, because of those that have been trapped, they are sending negative signals to foreign investors. So say for oil and for proceeds from oil, then it may be really hard to get foreign portfolio investors to come in at this point to also to support the reserves. So I believe that something has to be done quickly if we don't want to head towards a major catastrophe.
Interesting. One of the major problems that we could face is if the MSCI Frontier Markets Index takes Nigeria out of that basket and make us a standalone. That means we'll be standing out in the cold instead of being cozy with other frontier markets within the MSCI basket. That's something to think about. Luke Ofojebe at Vetiver Capital, I'll just ask you, what's the take so far for the week on the equity side? What's your big play?
Okay, so yesterday we saw a red day in the equity market. All sectors closed in the red. Banking, for instance, lost up to about 5%. We saw losses in other sectors as well. And this was just mainly due to two major factors. One is that the macroeconomic picture for Nigeria, of course, is not great due to the impact of COVID-19 on the economy. At the same time, we see have a number of foreign investors who are not really interested in our economy. They are not interested in the prospect for growth. Whatever the economy has for them is just not it for them. And this is mainly a reflection of constrained FX liquidity at the NAPEX window. So like Ayodeji rightly said, a number of them are actually still stranded. We still have a number of them who want to leave, but due to limited FX supply, they've not been able to do that. So we think these two factors will continue to pull the market down. However, for domestic investors who really want to invest for the long term, we think these prices are actually trading at attractive entry points. So for these investors, this could be a good time to cherry pick on some of these stocks across board. But overall, we think we'll continue to see a similar trading pattern next week, today and next week. And I mean, in the short term, this is just what we'll be seeing. For domestic investors, like I've always been saying, for the active traders, it could be buying now when stocks are trading at very low prices, and when they see sizable gains, they begin to take profits. However, in the month of July, I think we'll see a number of investors on the sidelines because we'll be expecting more half-year results from next week. And given by what we've seen so far in the economy, I mean, making reference to the impact of COVID-19 on the economy, we'll be seeing significant declines in turnover as well as bottom line. We saw what Guinness released recently when the firm said that in its full year results that they are just about to release, that investors should be expecting significant declines in turnover as well as bottom line. So we should expect similar trends for other consumer goods companies.
Okay.
So all in, this July, we expect investors to remain on the sidelines as they watch results that companies should be releasing. Then after that, we think for investors who want to invest for the long term, it could be a good time to cherry pick on some stocks. Thank you.
Interesting. Thank you, Luke Ofojebe. Let's quickly run through the Southern African markets. The GSE a bit healthy this morning, continuing from where it finished up on Thursday. The Rand also lost the 17 handle against the dollar to 16.9. Yesterday, it was a very big rally. The GSE All-Share Index up 1.54%. The top 40 index was a bit bigger than that. Meantime, the GSE has okayed the listing of 2 unsecured structured papers by FirstRand. Meantime, for nearly 20 years, South Africa's current account was in the surplus territory, 69.7 billion rand in Q1. Meantime, there is no reopening date set for the closed Zimbabwe Stock Exchange because the authority says investigation is still ongoing. Ali, take it from here.
So very strong session for South Africa yesterday. Stock market up 1.54%. That's a good performance by any measure. The Rand back near below with the 16 handle, below 17. That was strong as well. I think the trigger for some of that obviously was a global positive spillover effect, but also that news about the current account standing at a record surplus. This is about the suppression of imports. But it's been, this is a phenomenon we spoke about before. We've seen it in India as well. And I think for emerging market investors, this is something that they really like to see because it tells you that the government is not going to need as much foreign currency as they might have done previously, reducing pressure on the local currency. So positive, very positive session over there. However, we've got this COVID situation, which is very, very spiking big time in South Africa. Gauteng province is being described as bad as New York at the peak. So there are concerns around that. But for now, emerging market investors have piled into South Africa. And just to touch on your final story, which is the Zimbabwe story, where really the most liquid stock is this old mutual stock, which people were using, buying into and sheltering against the collapse in currency and the high inflation rate. If for now it looks very murky, it's not clear that the authorities have a clear path back to an equilibrium. When you do shut the stock market, things are very thick, as they might say.
Interesting. So let's touch on very quickly the North African market. Quite a few stories we put together overnight, where we finished up in the north of the continent. Morocco's story is that the CDC Group, which is the UK overseas investment firm, with FinFund, which they're putting together 70 million US dollars into a private equity firm by the name Africa Invest Fund 4. The idea was to use the $70 million. FinFund is bringing $20 million. CDC Group is putting $50 million on the table, and this money will go towards small and medium enterprises investing, buying some assets. AfricVest invests in about more than 2 dozens African countries, including Nigeria, as well, buying up companies' shares in private equity business and all of that. Meantime, Casablanca Stock Exchange announces the volume required now if you want to do share buyback on this stock exchange. An International Bank of Tunisia is doing a capital raising, bringing in 178.5 million dinars from its reserves to shore up its capital base and be up to regulatory requirements. So let's get back to the story around AFDB, and I'm going to ask Ali for just 1 minute's comment on this. That's the U.S. Secretary of the Treasury, Steven Mnuchin, issued a very short statement overnight, which was released by his office in the U.S., that he welcomes the appointment of an independent committee to review the Ethics Committee report on Dr. Adesina, the president of the AFDB. Says, quote, and I want to use some of his words, says the independent review is demonstrate the strength of the AFDB. What's your take on this latest story from the AFDB from the US?
So just to give some context, this is the story around the reappointment of President Adesina and a lot of negative news that came from predominantly the American side. There was an internal review which gave the president a clean bill of health, and the Americans pushed back and said, no, we need something independent. And not only the Americans, I think some of the Scandinavians as well with the Americans. So I think this is a very positive step. It's a very credible external committee, external group to look at it under the auspices of, I think, the ex-Prime Minister of Ireland, if I'm not mistaken. So I think this is a path to resolving the matter. You've got a very credible group. We're going to now look at the situation, and I personally expect them to give the good president a clean bill of health. And I think it's around the credibility of that clean bill of health. This is a positive step. President Adesina is a very dynamic, very mercurial, bow tie wearing president of the African Development Bank, strong promoter of the African interest. I think the push from the Americans has come, and Malpass also at the World Bank pushed back a little bit at the back end of last year. I don't know if you remember, saying the AFDB was giving out money. And I think it's also a bigger geopolitical story. It's between American and Chinese influence and seeking to make their weight felt. So overall takeaway, positive step, expecting a clean bill of health, a very successful president of the African Development Bank, in my view.
Thank you so much, Ali. Ayodele, what's your take on this?
I align with Ali. Because it's good to also have that independent view, which is also positive for the institution, and even based on global perspective. So, I believe that once we're able to get through this, based on a lot of the ideas, innovation that is brought on board, and we believe that we will also be able to secure that second term in office. So I think it's positive even for the Africa story.
So thank you, everyone. We have a lot to talk about next week. The AFDB is releasing a supplement to its African Economic Outlook report. That will be on Tuesday. We'll talk a little bit about that next week. I'm sure everyone is interested in. This is the first time in about 20 years that the AFDB is reviewing its Africa Economic Outlook report in the middle of the year. So this is quite historic, and I'm sure we'd like to see what the new report will have to say. So let's leave it there for today. Friday, thank you so much, Ali Kansacho in Nairobi, the Rich Frontiers Management CEO and founder. Have a great weekend and see you on Monday. Meantime, Ayode Jebo, thank you so much from Afrinvest Securities Limited. Thank you very much, the CEO and the chartered trader. And of course, Luke Ofojebe, who is the team lead in charge of equity research at Nativa Capital. Thank you, gentlemen. Have a great weekend, and I'll see you bright and early on Monday.